Term conversion windows are quietly one of the most powerful features in financial planning, and almost nobody talks about them until it's too late. Today, we're pulling back the curtain on something that could either save you thousands or cost you dearly, depending on whether you even know the clock is ticking. Let's set the scene. You bought a term life insurance policy years ago, feeling smart, responsible, maybe even a little smug about it. But somewhere between the kids' soccer games and the mortgage refinance, a small deadline crept up that your past self never circled on the calendar. A conversion window is essentially a built-in escape hatch inside your term policy that allows you to convert it into a permanent policy, think whole life or universal life, without proving you're still healthy. It sounds boring until you realize it means your insurance company cannot deny you coverage based on a new diagnosis, which suddenly makes it sound a lot more like a superpower. The mechanics work like this. Your insurer gave you a term policy with a window, usually lasting anywhere from 5 to 20 years or until a certain age like 60 or 65, during which you can make that conversion. Once that window slams shut, you're back to square one, reapplying, re-underwriting, and explaining every doctor's visit since the Clinton administration. Here's where the behavioral economics gets darkly funny. Most people don't convert because they feel healthy, and most people who need to convert are the ones who waited until they didn't feel healthy anymore. It's like buying flood insurance after you've already started rowing a boat through your living room. Now let's zoom out, because this isn't just a life insurance story. It's a story about optionality and how humans chronically undervalue the right to make a future decision. Behavioral economists call this option neglect, and it shows up everywhere, from stock warrants to real estate lease clauses to, yes, the dusty rider on your term policy. The historical irony is that conversion features were originally added to policies in the mid-20th century as a consumer protection, a way to say, look, life changes, and we'll give you a graceful exit from your original choice. But somewhere along the way, the insurance industry got real good at printing that feature in the smallest font legally permissible. Let's address the biggest misconception head on. Many people assume converting a term policy is some kind of loophole that insurers will fight you on. In reality, the insurer priced this feature into your original premium. So exercising it isn't sneaky, it's literally what you paid for it. The practical lesson history teaches us is this: treat your conversion deadline like a mortgage renewal date, not like a dentist appointment you'll get to eventually. Set a reminder 3 years before the window closes so you have time to actually evaluate your health, your needs, and your financial picture without making a panicked, emotional decision. One more angle that doesn't get enough airtime: conversion windows are particularly valuable for people whose health has changed, but whose wealth hasn't yet caught up. A 48-year-old with a new diabetes diagnosis and a growing business needs permanent coverage far more than their 30-year-old self did. And the conversion window is the only bridge that gets them there without a medical exam gauntlet. The discipline here isn't about being morbid or pessimistic. It's about recognizing that your future self will be operating with a completely different set of facts than your current self. And the smart move is to preserve their options today. Position sizing matters too. Don't convert more coverage than you can sustain in premiums long term, because a lapsed permanent policy is somehow worse than no permanent policy at all. At the end of the day, the conversion window is a lesson in process over timing. It rewards the person who reviewed their policy annually, not the one who remembered it existed during a health scare at 2 a.m. Discipline, documentation, and a calendar reminder will always beat conviction and good intentions. You don't need to convert your policy. And maybe after reviewing everything, you'll decide the term coverage is exactly right for where you're headed, and that clarity alone is worth the exercise. Financial peace isn't about making the perfect call every time. It's about making informed, unemotional decisions before the clock runs out rather than after. And whether you're navigating insurance strategy, building wealth through real estate, or trying to make smart moves with the assets you already have, the best time to understand your options is always before you need them. Check out our links in the description below to see how we can help you get started, whether that's real estate investing, home contracting work, or connecting you with the right lenders.